Hello again. Now, operational costs from GoldBod alongside trading shortfalls have been identified as the major drivers behind losses under the Bank of Ghana's Gold for Reserves program, which climbed to $214 million within the first 9 months of 2025. So really, what does this mean? Head of our research here at Joy News, Isaac Ofieje, is joining me in studio to break it down for us. Isaac, let's run through the numbers. How did we get here?
So, I mean, the IMF has their latest reports available, and that is what we've been going through currently. And our focus is on the GoldBod. This is because if you look at the current, state of the economy, it's an economy that is being run on the wheels of gold exports. And we understand that GoldBod, for instance, this year alone has been able to sell about $10 billion, dollars worth of gold, which has saved the city in a certain way. But the IMF has an assessment report on the performance of Bank of Ghana's domestic gold purchase program, of which the gold for reserve is a subset, and the gold for reserves is a bit connected to the GoldBod in terms of the trading aspect of gold, and even the Bank of Ghana also getting gold to sell for reserve is also connected. And according to the IMF report, I want to read what the IMF says about the GoldBod program. And it says that if you look at the GoldBod program, between January and September of 2025, losses from the Bank of Ghana's Gold for Reserve program reached about $214 million. And they cited about two key factors. They spoke about trading losses, as far as this program is concerned, as well as off-stickers fees from GoldBod. And we understand that as the GoldBod initiative is becoming bigger, and also the Bank of Ghana's Gold for Reserve program, as well as the domestic gold purchase program is scaling up. Some of these things are expected because gold is a sophisticated, mineral, a very precious one for that matter. And so if you buy it, you need people to assay, test its quality and all of that. All of those fees are included. If you are talking about buying the gold itself, if you really want to compete in the market, you need to offer premium prices so that smugglers will not, send the gold elsewhere. And we understand that the GoldBod is putting in initiative to be able to stop smuggling and also even traceability and all of that. But what we understand is that because of the trading losses and off-tickers fees from the GoldBod initiative, the Bank of Ghana has to do with some $240 million losses so far as part of its Gold for Reserve program. And we understand that because of the gold exports we did this year, the Bank of Ghana from August 2024 to about September, October 2025, they were able to intervene in the market about $10 billion, US dollars to actually help the market. And this is significantly from the GoldBod inflows that we are getting. But one thing that stood out, and the information we are getting currently from the IMF program, has to do with the fact that because of trading losses and then off-tickers fees from the GoldBod initiative, Bank of Ghana has to deal with some losses of some $240 million US dollars from its domestic gold purchase program, or the gold for reserve program aspect of the domestic gold purchase program.
That's quite insightful. I think one of the things that I find very interesting is that it says the domestic gold purchase program poses risks to the financial sustainability of the Bank of Ghana. Really, what does that mean?
In fact, if you remember the gold for oil program, the IMF was against the Bank of Ghana being heavy in the equation in terms of bearing the cost of the gold for oil program. And remember, the gold for oil, for instance, also posted a loss of about some $128 million US dollars, which sat on the books of the Bank of Ghana. But according to the report, it says that that loss is expected to be transferred onto government's, balance sheet. It will no longer sit on government, the Bank of Ghana's balance sheet anymore. And so, if you are talking about the risks ahead, it's just like the fund saying that, well, we understand that your gold purchase program, your domestic gold purchase program is scaling up. And because of that, there are down risk attached to it. You're going to buy more gold. You're going to be exposed to higher risk. And the question is, who is going to bear this cost? If it's the Bank of Ghana, then the Bank of Ghana is going to have a difficult situation because they're going to have their balance sheet being affected. Because already, Bank of Ghana had to take in that $128 million loss from the Gold for Oil program.
Right.
And now we are talking about GoldBod initiative and trading losses. That is accounting for about $240 million as far as the Gold for Reserve program is concerned. Now, many are doing some sort of comparative analysis, Ken.
Yeah.
If you look at, remember last year, for instance, when we had this similar report that said that the Gold for Oil program, which was introduced under the previous administration, a key program of the former Vice President, Dr. Bawumia, had brought in some $128 million loss, which around that time was about, some billion, Ghana cedis.
Right.
And people spoke about it, right? But if you do the comparative analysis, Gold for Oil, for instance, in an entire year of 2024, the losses attached was $128 million, US dollars. If you're comparing it to the domestic gold purchase program. But this year, for instance, we've done only about 9 months of accounting period for the GoldBod initiative and the trading and the off-takers, risks that are exposed and all of that.
Yeah.
And it cost around $240 million. And there were a lot of people who raised this concern that, well, the GoldBod initiative is a good initiative. But if you don't block some of these loopholes, you may end up like COCOBOD, which every year you may be piling up debt, because if this debt cannot sit on the balance, on the sheet or the books of the Bank of Ghana, the key question is whose books is this going to sit on? Because the IMF has directed that the $128 million debt, losses that was made under the Gold for Oil program should be transferred to the government books.
Yeah.
So the key question is, who is going to bear this $240 million, loss? Is it going to sit with the Bank of Ghana? And if it's sitting with the Bank of Ghana, it's going to complicate the Bank of Ghana's, position at the moment, because they themselves are looking for monies for recapitalization. Because of the DDEP program, they got some significant impairment there, and they are looking for money. And remember, the finance minister said that, well, look within. You have assets, try and see how you can actually solve this situation, because we, the government, or we, the central bank, cannot come in and give you about 40 billion or 50 billion, cedis to recapitalize. And so if there are programs like GoldBod and, Gold for Oil, Gold for Reserve programs, which are posing significant, impairment to the Bank of Ghana, then the fund is saying that we need to take a critical look at that, because if we continue to go on this, the risk is that we're going to have downside risks attached to some of this initiative, which probably is going to put the Bank of Ghana in a very difficult, situation, Ken. That's
quite interesting. But if we don't go yet, let's still stay a while on the IMF, because the International Monetary Fund has maintained Ghana's classification as a country at high risk of debt distress, even as the country records major improvements in its debt profile. Well, Ghana has already achieved the IMF program target of reducing debt to 55% of GDP, 3 years ahead of schedule, now standing at about 48%. However, the IMF says there exist some fundamental elements that leaves risks surrounding Ghana's debt elevated. And still in the studio is Isaac Ofieje with our research team. He's the head of that particular desk. Isaac, let's go through this one. Why is the IMF still classifying Ghana as a high-risk debt distress when the numbers really are looking very low? If you remember last week or last 2 weeks, we published a story that actually said that Ghana's debt in the third quarter rose by some 70 billion cedis because of the exchange rate, vulnerabilities. It's the same factor that the IMF is, citing, that, well, you may have your debts being reduced from the highs of 70 billion, 700 billion cedis to about 613 or 610 billion, Ghana cedis. But we still feel that, according to the IMF staff, their judgment, the judgment they pass on Ghana's debt status, it's clear that they still see Ghana as a country which is still high risks of debt distress. It means that defaulting could be possible if we remain in high debt distress. Why are they saying that? Because they still believe that the significant, your external component of your debt stock is really driven by your exchange rate. And so in periods where
your exchange rate isn't in a very good position or isn't in a positive situation, it's going to affect your debt, like we saw in the third quarter. And when you have it in a very good position, like we saw in the second quarter, you may see your debt, decreasing. So they believe that even after the restructuring we've done from the debt forgiveness to moratorium and all of that, the IMF still sees Ghana as a country that is still at high risks of debt, distress, especially if you look at it from the judgment of the staff. And they are really, really going heavy on the tangent of the exchange rate, which they believe that the exchange rate is going to be a key factor in determining where our debt distress status will be in 2026 or the years ahead. Remember, the IMF passed a comment in the report, which I think is very interesting. They say that, well, because of the current vulnerabilities that exist in our exchange rate, environment, it will be premature for them, the IMF, to conclude that or to upgrade Ghana's debt status to any better. They still believe that they have to maintain the debt distress status because once there are shocks from commodity, external commodities, the international commodity prices and all of that, gold, for instance, is key here. Once anything of that status happen or that structure happens in the global space, right, it's going to have a significant impact on Ghana's debt status. That's why they are a bit hesitant in upgrading the country's debt status from where it is currently. And they're also very mindful that if you look at the debt restructuring we did, for instance, in 2026, we are expecting some $1.4 billion or $1.5 billion in debt, relief because of the restructuring that was done by the previous administration. If we are not able to go through that process, that's also going to have a big impairment on our balance of payments, even though the balance of payment gap has reduced significantly because of the restructuring that was done. But significantly, the IMF believes that, well, we don't really see your exchange rate, situation as one that we can stand on it and say that, well, we feel that we should upgrade you. They still feel that vulnerabilities exist, and because of the fluctuations they see in the exchange rate, it will be difficult for the fund to say that, well, we are upgrading, because they've seen it this year. Even this year, where we've pumped in about $10 billion to save the city, we've had a roller coaster where first quarter was very stable. Second quarter, the city saw an appreciation by more than 40% against the dollar. Third quarter depreciated by more than 20% against the dollar. And we are seeing a cocktail of appreciation and depreciation in the fourth quarter. And the IMF is looking at all of these factors and saying that because of these factors, it will be difficult to upgrade you from your current debt distress status that we've actually placed on you.
Isaac Ofieje, always a pleasure to have you in the studio. He's the head of research here at Joy News.